you have been seeing my face for months every time consensus ad pulls up, so happy to be here finally and talk about these important issues.
Thrilled to have you here in person. Let's get things started.
Yeah.
It's been a busy couple months for you, I'm sure. In particular, I just want to start with the work that you have done over the Technology Advisory Committee, which is something you sponsor. We've seen this with the CFTC for a number of years now. Can you just talk about how you're approaching it, your thoughts on the TAC, and what you hope to accomplish with it?
Yeah, so first let me give my standard disclaimer that the views I'm about to give are my own as a commissioner and do not necessarily reflect the views of the commission or my fellow commissioners. So yeah, I sponsor the Technology Advisory Committee. So the idea of these committees these are the ways that we engage, right? We want advice and to hear from those outside of the CFTC, want to make sure we're not in a bubble. So I sponsor the Technology Advisory Committee, which I chose, and I'm very excited to sponsor. And so as I looked at it and started thinking about kind of what's before us with a lot of emerging and evolving technology, I thought, well, I want to reconstitute the membership. I want to bring in technology experts. Number one, my priority is that the government is able to keep pace with technology. And I know that usually is very difficult to do. And so you bring in technology experts, people who are in the field now, who are working in these areas. And so this is digital assets, it's blockchain, but it's also cybersecurity, it's also responsible AI, cloud services, all of that. So I reconstituted the membership, bring in a lot of different voices, people who are really trying to be involved in public service and trying to help us really figure out. So I think my first priority is so that we can keep pace with technology. My second priority is to help us, the TAC is gonna help us kind of balance having a situation in a market in these technologies, particularly digital assets, where we are trying to balance customer protections, managing risks against responsible innovation. And so, that raises a lot of issues about how do you do that? And is that different for different types of technology? Is that different from centralized exchanges, then DeFi, all of these issues, and then cybersecurity? And we just met March 22nd. It's a public meeting, it's on our website. We went kind of deep into DeFi, but the next thing leads me to my third priority, which is cybersecurity. This is obviously a larger issue than just digital assets, but cybersecurity has really grown in severity of the threat and the sophistication, lots of state actors. And so, during our meeting, they were going through like how exactly the Ronin Bridge hack occurred, right. Badger DAO, those types of things, cross-chain bridges and, man-in-the-middle attacks with Badger DAO, and like what can be done to eliminate those vulnerabilities.
Right, and kind of jumping on that,
yeah.
Earlier this week you gave a speech where you said that it's possible for crypto companies to distance themselves from mixers and those kinds of tools. How do you view the role of privacy in digital transactions and the use of some of these tools that you just mentioned, or that you mentioned in that speech,
sure.
Including Tornado Cash and the like, and what are regulations that could address those?
Yes, so, I was giving a speech at a conference on institutional adoption of digital assets. And so who am I talking to? I'm talking about, part of the industry that wants to be regulated, part of the industry that wants institutional funding. Those institutional fundings have certain requirements, anti-money laundering, know your customer, countering the financing of terrorism, that sort of thing. And so, as I meet with a lot of companies, they're like, we want to break with this sort of dark part of crypto, this dark past of crypto. We want to be legitimate. We want to offer legitimate choices to investors, retail and institutional. So I'm like, okay, well, that fundamentally starts with, trying to get away from crypto's use for illicit finance, for money laundering, for terrorist financing, for darknet markets, that sort of thing. And so I've conducted a lot of money laundering investigations over my 2-decade career in the federal government. And so, that starts with the idea of identity, and that's what happens in TradFi. So part of the TAC is to sort of help us go, okay, here's the risk. it's a national security risk, which is larger than any individual person. And you say, okay, well, what do you do in TradFi? Well, you establish identity, verify identity, and then do other things. How does that work in this space? And so we had presentations for companies that work on digital identity. There's more things coming. And then you have to address the idea of mixers. And some will say, you know, well, maybe individuals want mixers. There's a larger public interest. It's the national security interest. I mean, when we're seeing some of these things happen, the hacks and that kind of thing, we're talking about, like, for the funding of Russia's war in Ukraine, the funding of North Korea's ballistic missile or nuclear capabilities. You know, this is the thing. There's just a larger public interest to be able to get around. And so the idea is to try to look at kind of why money launderers, terrorist groups, why are they interested and attracted to crypto? And a lot of it is the allure of anonymity. And so you address anonymity, move away from that. However, you still recognize that customers want financial privacy. Right. And that's okay. Like, financial privacy is good, you know. So, but it's different from anonymity, and it does require kind of fulfilling these anti-money laundering requirements.
Right. So something we're seeing, you know, especially now, is kind of the proliferation of decentralized finance as not just a tool for illicit actors, but also for just a lot of people are getting into DeFi and playing around with it. How do you look at, you know, DeFi within that lens of, you know, is there a regulatory framework approach to that? Should it be industry driven to make sure there's no, you know, illicit actors who are able to easily just take advantage of these tools?
Yeah, so let me start with, I always think that the industry can drive a lot of change here, right? I mean, I think to the extent that the industry is waiting for Congress or regulators to act, you don't need to move forward and try to get yourself in a situation where you are preventing the use of your technology for illicit finance. But I think ultimately, on DeFi, one of the things that's been really helpful for me is to use the tech, because there's been so much focus this last year on centralized exchanges, right? And part of that is because the CFTC, we regulate centralized exchanges that are trading Bitcoin futures, Ether futures on our registered exchanges. Obviously, Congress looking at registered exchanges, and then the bankruptcies that you just talked about. You know, there was a number of things happening and enforcement actions. So at the same time, DeFi is starting to grow. I'm starting to hear from some in the industry that maybe there's a move, some of the VCs or others, towards DeFi, maybe away from centralized exchanges. And so the idea was sort of like to have these experts come in on DeFi and say, what are the benefits of DeFi? Are there benefits? Do they move away from the risks of centralized exchanges? Do they present other risks? And so another question is just, what is DeFi? I don't mean what is the future of DeFi or the promise of DeFi. What is DeFi right now? And so one of the things we talked about was like, what are the indicators of decentralization? And right now, is that all there, or is there still a lot of indicators of centralization? And so best way to think about that is how D is the phi, is how that's how the TAC chair put it. When you think about decentralized finance, you do have to think about accountability, whether that accountability is eventually put in code or through smart contracts or otherwise, or through people or central actors right now. And so this is the area that I'm looking at, is accountability. Who is accountable for code exploits, for strengthening cybersecurity, for preventing illicit finance, and how is that going to be built in? And ultimately, I think regulation will sort of come in that area, and this is something that I'm speaking to Congress about. But I want to make sure that I'm hearing from people in this space and companies in this space so that I'm keeping pace.
So on the congressional question, obviously lawmakers are looking at this. There were multiple hearings just yesterday, several over the past week and a half or so, about crypto regulation in particular. I guess to what extent are they engaged with yourself and your fellow commissioners at the CFTC? And what experiences have you had that you would like them to actually acknowledge as they start drafting bills and trying to message their approach?
Yeah, so I have a lot of contact with the Hill, and I've also done a number of speeches where I've laid out sort of some things that I think they should consider. DeFi's one, the application of the anti-money laundering, know your customer, CFT sort of obligations. This is throughout for all of it, and how we do that. That's one area. customer protections, thinking about retail customers, how they may be different than institutional investors. Does that mean better disclosures? Does that mean better education? How do we address these click wrap agreements that people are scrolling down accepting, and then in Celsius bankruptcy sort of not having ownership to that? Bankruptcy priority is another one. Conflicts of interest are significant. So what we see a lot, particularly in the centralized exchanges, we see vertical integration. So you've got the same company or its affiliate, that's the exchange, is also the broker, the market maker, the clearing house. I mean, when you do that, there are conflicts that need to be resolved. And so how do we resolve those? Run risk is a big issue. What happens, and you've seen the run risk happen, and that sort of ends up like sort of triggering all these redemption requests. If people don't know what their rights are and they don't know where they're going to fall in priority and all of that, customers are in a musical chairs dilemma, and they do not want to be the one standing when everyone else gets a seat. And so they are going to, at the first, kind of start to run at the first sign of weakness, or even in a counterparty. It doesn't have to be weakness in the crypto exchange itself. And so we want to protect against that run risk in ways that sort of can calm the markets, bring confidence to the market. And then there's contagion risk, because a lot of these companies are highly interconnected. So there's a number of different things in this area, and I think I've put out about 10 different proposals, but ultimately, sort of the biggest one is the idea of what are we doing with a regulator over Bitcoin and the other spot market that are not securities. Because right now, we have anti-fraud authority, but we don't have regulatory authority. So we could bring a case, but we can't prevent the harm from happening in the first place. We can't prevent the fraud, and then we also can't put in measures to try to regulate it, to try to limit the risk. And so you've got a number of issues like that. Lastly, I'll say banning commingling. We should not be banning customer assets with exchange assets or company assets. This is something I've been speaking about for a very long time, and just saying, this is an area that it just should not even be on the table. Please don't wait for regulation. Just do it. It's just bad for customers. You're going to increase your run risk. It's just a terrible way of doing business.
You're saying if an exchange, say one of the largest in the world, happens to move billions of customer funds into, its corporate wallets, and then maybe hands them over to a research firm affiliated with it, that could be bad?
So I won't comment on any pending cases that we have brought, but this is something I was talking about, this commingling issue for several months before FTX's collapse. But I will also say I've also read the user agreements for several exchanges, and it is not clear to me whether that's happening or not. So let's make it very clear. If you do not make it very clear, you are going to significantly increase the run risk at the first sign of something happening.
So on the litigation front, obviously last year, I think it was, we saw the case against UkiDAO and BZX.
Yeah.
And that raised a lot of questions about just, how the CFTC, and this ties back to DeFi, but
right,
how regulators can approach these kinds of, in theory, decentralized entities that, again, in theory, have people scattered around the world, don't have a manager or organized directors. How do you look at that in terms of just like a philosophical level?
Sure.
To try and navigate that to bring in enforcement action?
Yeah, I mean, so everything's going to be facts and circumstances. I've been bringing enforcement actions for 20 years now, both criminal and civil. And so it really does come down to kind of those indicators of decentralization. Well, let me first say this. The organization itself is still going to be accountable. Whether individuals are accountable as well is a different matter. But one of the things we see is that when we have someone acting in a way that would cause them to have to be registered with us, like you've got U.S. customers, you're offering margined, leverage products to them, you're not doing it through an exchange that's registered with us, boom, you just triggered registration with us. If you're not registered with us, it's going to be an issue. And so that's when you potentially face an enforcement action if you're not coming in and talking to us. And so I think a lot of times, there'll be some that say, we want to register with you, and they're going to file an application. There's others who are like, no, we're going to be quiet over here and not do anything. I will tell you, one of the things that we see is that people try to make themselves enforcement proof. I don't know why you would say that. Like, if you want to make yourself enforcement proof, you would have to follow all the laws. That's the way you become enforcement proof. So, it's not a difficult proposition, but you should know the law. And so one of the things is just, you're not going to be able to escape regulatory authority if you are acting in a way that is a privilege for those who are regulated. And that's sort of the line, right? You can have it one of two ways. You can choose to be regulated, and then you get all the benefits of being able to reach U.S. customers in that way, or you can just not do that and then not worry about regulation. But to the extent you're doing that, and I get it, like U.S. markets are fantastic, they're liquid, they're strong, there's a lot of confidence in them. If you want to tap into that, you're going to deal with a regulator. So
I think one of the most fundamental questions that I've heard from readers, CoinDesk audiences for years and years now is the line between a securities and a commodity as it applies to crypto. Where do you see the responsibility for kind of creating that line or defining that line? Is it Congress? Is it the regulators? Is it a combination? And do you see that line being defined in the near future at all, or is it an ongoing question?
Yeah, so it's a little bit easier for me because I work at the CFTC and not the SEC, so I work at the CFTC. I don't speak on behalf of the SEC. Almost everything is a commodity. That's basically the way you think about it. It can also be a security, but it's still a commodity. If it becomes a security, it doesn't remove the fact that it's a commodity. It's just if the Securities and Exchange Commission determines it to be a security, they pull it out of our jurisdiction. It still remains a commodity. So as we're looking at things, we're saying, is this a commodity?
Right.
And pretty much everything is a commodity. So when you ask about sort of, these, we have Bitcoin futures, we have Ether futures, sort of all trading on our registered markets. Do I think Congress might step in and do something? I mean, I think this is an area that, I think there has been discussions about whether Congress wants to do something or not. The fact whether Congress does something or not doesn't change the laws, and so you do have to sort of look at the laws as they exist. This was what I was saying, if you want to step into the regulatory role. But 100%, like you're probably on these digital assets a commodity. And so, the best way to think about it is that if you step into our markets, you are at least triggering the CFTC's jurisdiction in that way. A lot of these things are going to be securities. I don't speak on behalf of the SEC, but it's sort of like not what it is, but what's the promise of it. If you think you're going to make money off of it based on what somebody else is doing, that's how we test, which is security. I will let the SEC make those determinations, but I think what's important is that we are talking amongst each other and trying to make sure that we are on solid ground. But ultimately, it's going to be a commodity, 100%. Right. And then, what happens, whether the SEC determines it's a security, is up to them.
Right. Unfortunately, we are out of time now, but thank you so much for joining us. And thank you, everyone. Stick around. Michael Casey will be right out. Keep things going.